What is going on, guys? Today we're going to talk about Goldman Sachs S&P 500 Core Premium Income ETF, ticker symbol GPIX. Year to date, it's up 1.86%. The past year, it's up 10.32%. The past 5 years, it's up 28.77%. And do remember the charting on this Google Finance or this Google website here is just price return, right? So, and the thing about this fund, it pays a lot of premium out in the form of distributions every single month. So the total real return is going to be much higher than the numbers listed here. So let's go to their website, look at some different, so I'm an individual investor. Look at some different things on their site here. Let's make this full screen for you guys. Yeah, GPIX, that is the symbol. They are seeking current income while maintaining prospects for capital appreciation. So why might you consider this ETF? If you're looking for consistent monthly distributions, if you want to have a core equity exposure with lower volatility, and you want to diversify your sources of income. Assets under management, $362 million. Total fund assets daily, $462 million. Currently trading for right around $50 a share. Has over 500 holdings. It's been around since October 24th of 2023, so we have a little bit of data to kind of analyze here. Coming up on its 2-year anniversary in October. It's an active managed ETF. It's targeting the S&P 500. Expense ratio 0.35. Net expense ratio 0.29. Not sure if there's a little bit of a discount there or not. The growth. So since inception, I'm not sure if this is total return or not, but $10,000 would have turned into $13.8K. Total return since inception. So the S&P 500 has returned 33.39. This fund has returned 28.19. So it is underperforming the S&P 500 index there. Looking at some more data. Since inception, it's up 28%. Past year, it's up 21.64%. Once again, I'm not sure if this includes, the dividends. I don't know if that's just a price return or a total return calculation there. Looks like it's currently paying around, 35 cents, 34 cents, 34 cents, 34 cents, 33 cents, 33 cents. So it's pretty consistently, but right around that 32, 33 cent range. It does look like it might be increasing a little bit, which is kind of cool. 30, 31, 31. Yeah. So some of the allocations, it's kind of similar to the S&P 500. Top 10% of the holdings, I think, is 35%, if I'm reading that right. Apple, Nvidia, Microsoft, Amazon, Meta, Broadcom, Alphabet, Tesla, and so forth there. 31% allocated towards information technology. And yeah, so it looks like that is the end of the data on this website here. So let's go ahead and head back here. So I want to look at the total real returns website. They do a really good job of kind of analyzing this data. So let's look to see what they did last year from a total return perspective. We're not going to account for inflation right now, but 22.32%. So pretty solid year last year. Yeah, good deal. So pretty close to the market. And then lastly, I kind of want to look at, what kind of yield they're spitting out And we can see that right here. And we can see that number is right around 8.54%. So not a huge yielder per se, but it's holding its NAV. 8% is still much higher than, the majority of dividend ETFs out there. So yeah, let me know your thoughts down below. This is Goldman Sachs S&P 500 Core Premium Income ETFs. Some things that stick out to me is the low expense ratio at only 35 basis points, the stability of the NAV, and the fact that it's targeting an index, that has a very solid, history, and then also that it's holding individual companies as well. It doesn't have synthetic positions, but just kind of keep in mind that, with that is you're going to get a smaller yield, but at this point in my life, I care more about growth and sustainability than income in a high yield investment. So do with that as you will. I wish they kind of switch up their frequency of payment schedules to where, it could be bi-weekly at least, or, weekly would be awesome as well. But we'll see if they roll, implement something like that in the future. With that, the fees are probably going to be a lot higher. So that's just kind of a trade-off. Do you want higher fees or do you want lower fees with less frequent distribution payments? So just some things to consider there. But yeah, guys, let me know your guys' thoughts down below. Once again, this is Goldman Sachs S&P 500 Core Premium Income ETF, ticker symbol GPIX.